Fed sparks a global rally. The Nifty and the Sensex hit fresh record highs. Listed companies had market capitalization of 4 lakh crore today.
IT stocks lead the gains in trade today as the shift in Fed stance raises hopes of US economy shifting gears from contraction mode, spurring technology spends.
Rate-sensitive sectors gained today. All eyes on the RBI now for any sign of monetary easing. Real estate stocks surge. DLF hits a record high.
Hello and welcome to Markets Forward, the show where we aim to get you all the key data points to gear you up for tomorrow's trading session. I'm Reema Tendulkar and with me is Nigel D'Souza. I think the word terrific Thursday says it all, right?
Well, that's right, Reema. What a terrific trading session it was. And in the next 20 minutes or so, we'll get you all the news, all the key developments that transpired on the last week today and also all the top corporate voices as well. But Reema, let's first run our viewers through the day's trading action today. It was a splendid trading session, a terrific Thursday, and it definitely gave you the sense that Santa's coming to town. We normally wait for the Santa Claus rally. Well, you saw part of that in today's trade as well. Let's run you through a few data points. The Fed, well, they fired up the global equity markets today, and it was a trend day. So if you look at the intraday chart of the Nifty, you bought at any point of time, you'll be happy. Because when you got up this morning, you saw the GIFT Nifty was up 200 points. You go home with 250 points. So that's a trend day in its perfect sense. The 10-year yields, well, they cooled off. And will the yields cooled off? It's normally good news for tech-related names. It has a positive rub-off. You have the Nasdaq that outperforms as well. And out here as well, both large-cap IT as well as mid-cap IT, they did very, very well, up close to around 4 to around 6% odd. Next up, the dollar index. Well, that cooled off. And when you have the dollar index that cools off, it has a positive rub-off on metal stocks as well. And that's why, the metal stocks, particularly the PSU names, they just had that tailwind. Couple it with the dollar index cooling off, Nalco as well as SAIL, they were the top gainers from the metals pack. And the third factor that played out was, now the Fed, it appears that they're done with the rate hikes, as they said, and maybe 3 rate cuts are there for the taking in 2024. The quantum is still debatable. The street is expecting 150. The Fed, the dot plot is suggesting 75 basis points. So let's see what we get. But if we get that, then it gives a further booster shot to the RBI to go ahead and trim down in terms of their rate. So that's why real estate stocks, well, they did well because now the cost of borrowing will come down. So real estate stocks did well. Your NBFCs as well, they did very, very well in today's trading session. All of them were up anything between 3 to around 7%. What do you track from here on? Domestic as well as global cues in favor of the Nifty. So it's a blue sky scenario really for the Nifty. Now we need to see what the RBI does in terms of easing of the monetary policy. So that's going to be very, very crucial. And today, Reema, after a while, you got a sense that maybe the large caps, they want to match up with what the mid cap and the small caps are doing. And in the near term, since there is valuation comfort out there, maybe we'll see that the large cap names of the headline index could perform in line or maybe marginally outperform as well what the small and the mid caps are doing.
Okay, that's how the day was. Let's tell you what we've lined up for you on our show today. We start with the top market movers of the day. Ekta joins in. The sector of the day was IT, where we give you the key reasons what led to the rally in the sector. CNBC-TV18's popular segment, D Street Chatter on the show. Nimesh will join in to tell us why DLF was buzzing in trade today. And last but not the least, we delve into the key market events to watch out for in tomorrow's trading session. But let's get to the first segment of the day. Ekta is joining in from the newsroom with the top stock movers of the day. Ekta.
Thanks for that. Well, I'll start with the entire Nifty IT space, which was in focus in today's trading session. So a lot of the IT stocks did surge. It was the IT index, which was at a fresh 52-week high. TechM, Infosys, LTI, Mindtree, HCL Tech, to name a few. In terms of Fed commentary, a lot of the rate sensitives were in focus. So the Nifty Bank was higher in today's trading session. We had a couple of the real estate stocks which gained. So DLF, Brigade, Oberoi Realty. And in terms of specific financials, we had HDFC Bank, which was in focus on account of the FTSE rebalancing tomorrow. So IIFL, for example, expects inflows of around $450 million. A lot of the PSE as well as railway stocks surge. So Hoodco, IFCI, IR, EDA, Railtel, IRFC, all of these stocks were active in today's trading session. Fusion Micro stock rose on the back of Honey Rose Investments, which is a Warburg entity selling around 9.25% stake via a block. We had an order win from NBCC, was around 1,500 odd crores from NCDC, so that stock was buzzing. And these are a couple of stocks which were in focus in today's trading session, very active on the upside.
Okay, all right. Thanks a lot for that. Ekta, well, joining us on the show now is independent market expert Amish Pala, who joins us on the show. Hi, Amish. Thanks so much for joining in on the show. What a fantastic trading session, right? It was. How would you approach trade from here on? And what's that one stock that you would like to tell our viewers about?
Nigel, because see, I mean, if you look around, there are hardly any red flags. I think most of the red flags are off in the last couple of weeks. And there's decent amount of liquidity in the market. People are making money, so they've been investing more. So I think this can continue for a while longer. When I say a while longer, possibly the next couple of weeks, because I really don't see any triggers as such, positive or negative, over the next couple of weeks. I think the only positive trigger could be in the next 1 or 2 days when we get the advanced tax figures. And I suppose the advanced tax figures should be good. So that will be a sort of a positive trigger for the market. So overall, I mean, the market should continue to move up. But at the same time, I would like to say that if you're looking at the mid cap and the small caps, I think the valuations are getting too expensive. But in a market like this, expensive valuations can get more expensive. So, but then at the same time, I think one needs to be a bit careful. I normally tell people to, I mean, especially in a market like this, I would clearly suggest that take some profits off the table. Don't be completely 100% invested. The stock for the day, which I would suggest one should buy tomorrow for a medium-term sort of a view, is an auto ancillary. It is Sona BLW, which is a leading automotive technologies play, which designs, develops, and manufactures highly engineered next-gen automotive system and components. They have, I mean, 71 OEM customers across India, Europe, US, and China for both electrified and non-electrified powertrain segments. And they have 9 state-of-the-art facilities across India, US, Mexico, and China. Around 26% of their revenue comes from EV supplies and about 22% from hybrid. So basically, it is future-ready, a completely de-risked model, a very strong order book position of about 22,000 crores, out of which EV-related orders is about 78%, which is about 17,000 crores odd. Among the fastest growing auto ancillary company with an expected PAT CAGR of 35% over the next 3 years. At the same time, they're also trying to, I mean, increase their non-auto business, which is about 10% now, but that's also getting ramped up. If you look at the EBITDA margins, it's about 27-28%, expected to go up a bit to about 29-30% over the next 2 years. The expected EPS for FY25 is about 16. So my target price here is about 640.
Okay, Sona BLW Precision on the market, though you do believe that it makes sense to book some profits. Shilpa Raut is with us on the show. Shilpa, what levels can you give when the market moves up 250 points in a single trading session to all-time high levels? What's next, according to you?
Good afternoon, Reema and Nigel, and thank you for having me on the show. Talking about indices, yes, a splendid run that we saw today, but the good news is that all the gains were protected. In fact, we have closed at the higher side of the day. Particularly Bank Nifty, here we talk about trading at around 47,700 zones right now. It has now given a breakout above 47,500. The previous crucial resistance is now a very critical support for us. So on any declines towards 47,500 is a clear buy for targets of 48,300 to 48,500. And likewise Nifty on every declines towards 21,000 now should be a buy for extended targets of 21,500 to 21,700. So keeping that in mind, we have a couple of buys for tomorrow, few stocks that have shown absolute stunning strength today. One is Indus Tower. Indus Tower closed at around highs of 201, which is nearly a 52 weeks highs. So that break here now and the sustenance for tomorrow will see the stock now rallying towards 220 zones. And the support here in the shorter time frame is around 196. So risk reward is very favorable. One should definitely participate in Indus Tower. The second one would be a buy in SBI. SBI, if you see, is trading at around 623, 625. It is just at the crux of breaking that 630 to 35 zones, which once it does, you will see a very strong rally and a very quick one, in fact, towards 680 to 700 zones. So these two stocks definitely for radar on tomorrow.
Okay, thank you for that. Indus Tower, State Bank of India, IT. IT was the sectoral leader of the day. The index ending at a fresh 52-week high, rallying 3.5%. But still, It's not at its all-time high level. The all-time high level was above 39,000, close to 39,447 that it hit in January of 2022. Nearly 2 years ago. It came just when the Fed had started to hike rates. The first rate hike took place in March of 2022, but by then the markets knew about, Fed's hawkish tilt, and IT stocks had started correcting. Many stocks are still quite the distance away from their record levels. Wipro, 40%, Tech Mahindra, 30%, TCS, 9%. Three big IT stocks are at their all-time high levels. In the large cap space, it's HCL Tech. In the mid-cap space, it's Coforge and Persistent. Now, what drove this rally? One, there is that bit of catch-up that will take place, considering this is one of the few indices not at its record high levels. But secondly, it's about the macroeconomic certainty, some clarity about the US economy. The US, for the last 1 year at least, the clients were very unsure whether they're going into a recession. They thought they needed to conserve cash, so they started holding back on technology spends. Decision-making slowed down. They started scrutinizing all their existing and new projects. So wherever the ROI, the return on investment on the project, was not immediate, they decided to pause those projects. Some of the projects even got cancelled. But now that, Powell has come out and said that the US economy is going to go through a soft landing, there is no hard recession as he sees it now, maybe that certainty will drive the clients of technology companies to start spending. And if it takes place, then maybe there will be that revival. And I think that's the hope, right? That at some point in the near future, demand for IT stocks may bottom out, and the stocks were on fire today with the index up 3.5% at the broad Nifty IT level. But let's talk about insurance, because those stocks were under pressure today.
Well, that's right. Insurance stocks were under pressure. This after the insurance regulator released a consultation paper proposing higher surrender value. Brokerage house Jefferies says that the move seems negative, but more clarity is awaited. Abhishek Kothari joins us to fill us in with a quick analysis on that. Abhishek?
Well, Jefferies has written a note on insurance. The IRDAI proposal of a lower surrender charge on non-ULIPs seems negative. However, they await clarity. So, new concept of threshold premium may raise the surrender values for the insurers. This can trim their fees, which they enjoy on, the surrender values. Proposal is at consultant stage, so final terms will be on deliberations. Insurers may offset some impact by lowering their cost. The non-ULIP actually forms about 40 to 45% of premiums, as well as value of new business, that is VNB, for the stocks under their coverage for FY24 estimate. So the impact is lower for SBI Life and SDFC Life, while the impact is the highest for Max Life as per their note. So this can be an overhang on the insurance sector. 10% lower profitability from this segment can actually make them trim their FY24 estimate anywhere between 4% to 6%. Back to you.
Thank you very much for that. Shilpa, any of the IT stocks that you like right now?
Definitely. Most of the stocks today saw a very, very big rally, but there are two stocks particularly that one can still enter. The first one would be Wipro. Wipro, with a crucial hurdle of 420 to 422, it has crossed and now it has sustained above that. So that will be a stop loss for now, and look for targets till 460 to 480. The other one would be an Emphasis. Emphasis is very nice, in a very sweet spot right now for targets of 2800 to 2900. So with a stop loss of 2500 from here, Emphasis is also a good buy.
Okay, all right. Thanks a lot for that, Shilpa. Amrish, what about you? What's your view on the insurance space?
Insurance space, whatever news has been coming out now surely is a bit negative. So after a decent run-up, I think we'll see some correction in these stocks. But I would say that could be actually a buying opportunity. Especially something like a life insurance. In case it corrects, say about 5 to 7%, I think that's a buying opportunity, because I see that stock going to levels of about 900, 930, which is close to the IPO price.
In IT? Is there any opportunity in individual stocks, Ambarish, particularly in the mid-cap space? We were just listening to Prashant Khemka of White Oak, and he said while even large-cap IT will do well, generally that valuation mismatch is more present in the mid and the small-cap universe. So in IT, is there anything that you like?
In the IT names, I would surely suggest a stock like Coforge and Tata Elxsi. like both of them have done decently well in the last couple of months. Especially Tata Elxsi has done well in the last 1.5 2 months, but there's still some more upside. Coforge, in fact, I am looking at a level of about 6,800, and Tata Elxsi should go to levels of about 10,200, 10,300 levels.
All right, Amrish, I wanted to ask you also about the metals pack. PSU's assets were doing well. And with the dollar index cooling off, suddenly you have some of these metal stocks that are doing well. Today, Nalco as well as SAIL were doing very, very well. Do you have a pick from there?
Absolutely. I think if you're talking the next 2 to 3 months, most of the metal stocks should do extremely well. In fact, I mean, out here, got a couple of picks. One is Tata Steel, where I see the stock possibly going up either 15 to 18%. Nalco is the other one. Hindustan Aluminum is the third one. And SAIL, which has done decently well today, can still go up some more from here.
Shilpa, Ambarish, thank you very much for joining in. As we've been highlighting since morning, it's been a very strong rally on the Wall Street. The strength in the market remained unabated, led by positive global cues after the US Fed decided to keep interest rates unchanged. Anyway, the domestic macro and micros were looking up, but today you're adding to that global buoyancy and optimism. We chatted with a whole host of market experts through the day on the prospects of the Indian markets and whether the rally will continue. Listen in.
Significant reduction in the interest rates would warrant, re-rating in terms of higher P multiples for the stocks, which is a logical other thing. But if it is, cyclical upturn, downturn from say 1.5% to 4%, 4% again comes. So this is a cycle. I think stock markets, they are already priced in this kind of movements. India has, despite all the difficulties world over, we have brilliant time. Goldilocks is on in India even earlier than US. Rise of capital market, like rise of retail. So that's very close to me. So I'm saying that. Of course, all the asset management companies, broking companies, your CDSL, NSEs, BSEs, whatever comes on the advices, all the wealth will be so much. You need all the global wealth managers will be sitting here, I'm telling you.
The god seems to be Indian. We were worried about US interest rate rising. Santa Powell comes out. We were worried about oil going to triple digit thanks to geopolitical tension. God plays his role, and tathastu, oil is down to 75. We were worried about monsoon, and while the August rains were bad, September recovery happened. We were worried about central election, and the state election results give an indication. So now you have to believe that God is an Indian, stay invested in the market, enjoy the ride. It's likely that India will be the biggest beneficiary of emerging market flows. And all these global investors ideally will more come towards large cap, which has a mood which looks cheaper from a valuation point of view, and where there is liquidity. So overall, I see large caps closing the gap with small and mid caps in 2024. The domestic investors' influence on the market is increasing.
The news overnight from the US and the positive commentary and the new dot plot and the projections therein, it's not something that is a big positive surprise. The markets had been anticipating this and assigning a big probability to something like this, but finally it's a reaffirmation that what the markets were projecting, that's the way forward, very likely for the Fed from here. So that adds to the positive environment for global equities, and having a good backdrop for global equities is always positive for Indian equities as well. Indian equity backdrop had been positive all along, and this further adds to that.
Well, with that, it's time to slip into a short break. We'll get you our popular segment, D-Street Chatter, along with the top market events to watch out for on the other side. You don't want to miss this. Welcome back. You're tuned into Markets Forward. Well, it's time for our special segment, D Street Chatter, where Nimesh gets us an insight as well as all the dealing room action. Nimesh, what's on your radar? Okay, all right. I think we'll get to Nimesh in just a bit. For the time being, let's hop across to Abhishek. He's standing by to tell us all the key events that we need to watch for. Abhishek?
Well, to begin with, we'll be watching out for U.S. economic data, wherein export-import prices, retail sales, as well as initial jobless claims that will be on radar. You'll also watch out for monetary policy decision that will be coming out for Bank of England as well as ECB. The other thing to watch out is that the RBI will be releasing their fortnightly numbers on deposits as well as advances tomorrow. The index rebalances will be seen for S&P, BSE indices, FTSE indices, and Dow Jones EM index, that is emerging market index. So board meetings, Gandhar Oil, they will consider their quarterly results. Other investor meet with the companies are as follows: Affle India with Malabar Investments, Westlife Foodworld with Centrum Broking, Ease My Trip with Prudent Broking, and CRISIL with Pari Washington Company Advisors. Other key events to watch out is that Bank of Baroda, they will be considering fundraise via debt instruments, and CLAT, that is NCLAT, will hear IDBI Bank as well as Axis Finance plea versus Z-Sony merger. And Retail India Summit and Expo in New Delhi by Retail Association of India will be the key factors to watch out for.
Thank you very much for that. And for the last element on the show, it's Nimesh for D Street Chatter. Nimesh.
A strong day for the markets, largely on back of global risk on. But in terms of individual names, here's my list of the stocks to watch out for. I've clubbed the 3 stocks where there's going to be large block deals very soon. The first name is Sterling and Wilson. We saw a large QIP there, and now I'm expecting the promoter to further sell stake via block deals. So that's the first one. The second is Nippon Life AMC. There's going to be a large block. A strategic investor is likely to sell a large stake in Nippon AMC. And the third name there is Eureka Forbes. A couple of initiating coverages off late, but they expect a large block. A P investor is likely to sell a large stake there. The second name was Onward Technologies. That was buzzing in trade on huge volumes after a large block. The stock almost ended 20% upper circuit. I understand AIF was a buyer in today's block deal, so disclosures will be important there. The third name is Strides Pharma. That's been buzzing off late. Even in today's trade, the volumes were on the higher side. I understand the leading HNI investor is an active buyer there, and hence some bit of excitement in that stock. And the last one is DLF. The real estate stock is doing good, but DLF stands out on back of strong buy flow. So some bit of institutional interest is back in DLF, and expect high delivery volumes on the back of large buying interest from larger FIs today.
Thank you for that list. With that, it's a wrap on this edition of Markets Forward. We will be back tomorrow, but till then, stay with us for more news and updates.